Welcome back everybody to Tax Talk Tuesday. I'm here with you again, Arthur Will, CEO of WGG Accounting and Tax Services. Let's begin. Okay guys, so today's topic is going to cover depreciation of property deduction. We're also going to go over some deductions that can benefit you for the upcoming tax season as well. Okay guys, so this is what you need to know. What small business owners should know about depreciation of property deduction is first, what property is depreciable. Now, small business can depreciate machinery, equipment, buildings, vehicles, and even furniture. Now, they cannot claim depreciation on personal property. So if a business uses an asset such as a car and want to use the business and personal purposes, the business owner can depreciate only the business portion of the asset. Now, land is never depreciable, although some building and certain land improvements can be depreciable. Okay, now business may depreciate property that meets all these requirements. The business must first own the property. Now, this business is considered to own the property even if it's subject to a debt. Now, this requirement also says that you have to use the property in a business or income producing activity. Now, if the property is used to produce income and the income must be taxable, the property that is used solely for personal activities can't be depreciated. Now, you also must be able to assign to a determinable useful life to the property. Now, this means that the property can wear out, decay, or get used up. So, and at the same time, you must be able to determine the useful life of the property. Now, you have to next expect the property to last more than 1 year. It has to have a useful life that extends substantially beyond the year at the business placed in service. Now, not to depreciate exempt property. Exempt property includes certain intangible properties, certain term investments, equipment used to build capital improvements, and property placed in service and disposed in the same year as well. Okay guys, so here's some more information about depreciation. Depreciation is an annual tax deduction that allows small businesses to recover the cost or other bases of certain property over the time they use the property. Now, small businesses can depreciate property when they place it in service for use for a trade or business to produce income. Now, the business stop depreciating property when they have finally fully recovered their costs or other bases when they retire from service. Now, this is whichever happens first. Okay guys, so the next topic I want you to look out for is business startup cost deduction. Now, startup costs are amounts the business paid or incurred for creating an active trade or business while investigating the creation or acquisition active trade for the business. So, startup costs include amounts paid or incurred in connection with an existing activity engaged in for profit and to produce income in anticipation of activity becoming an active trade or business. Okay guys, now I'm going to go over qualifying costs for your startup costs. Now, a startup cost is recoverable if it meets both of the following requirements. The first one is it's a cost a business could deduct if they paid or incurred it to operate an existing trade or business in the same field as one of the business into. Now, the second one is a cost of a business pays or incurred before the day the active trade or business begins. So, a startup cost includes amounts paid for the following as well. The first one is an analyst or survey of potential markets, products, labor supplies, transportation facilities. Now, the next one is advertisements for openings of the business. The next one would be salary and wages for your employees who are being trained and their instructors as well. Now, next one would be the travel and other necessary costs for securing prospective distributors, supplies, and customers. And then the last one would be salaries and fees for executive, consultants, or similar professional services. Okay guys, so we went over depreciation of property deduction and startup costs and some qualifying costs for your startup costs. That's all we have for today. See you guys next week for Tax Talk Tuesday. If you have any more questions, please visit at wdgtax.com. Thanks.